Ladies and gentlemen, boys and girls, we have had a historic day in the silver and gold precious metals markets today. Welcome back to the Daily Stack Report, where I bring you precious metals updates on the daily. Today, we saw silver go all the way up to $117.73 on an unprecedented move in the morning market trading. And then, towards the end of the day, it got hit and went all the way down to $101.92. Guys, if that's not volatility, I don't know what volatility is. That's what this is all about, baby. This is the gold and silver rush, and we are seeing it live action. So be blessed that you are a part of it, guys. We saw the gold to silver ratio drop all the way down to 43.52, and it is currently sitting at 47 right now. And gold, on the other hand, shot all the way up today, all the way up to $5,111, and is sitting currently at $5,050 as I'm making this video. So like I said, guys, welcome back to the Daily Stack Report. Today was absolutely historic in the precious metals market. If you want daily gold and silver insights backed by real news and data, hit that subscribe button and turn on the notifications, because this market is getting crazy and you're not going to want to miss any of these moves. Alright guys, so today silver surged to an all-time high near 118, and gold hit a record high around $5,011 per ounce, $111 per ounce, sorry about that. These were both historic levels for their respective markets, and today was not a slow crawl. It was an absolute blast and acceleration move on the uptrend, and we saw that downtrend, guys. We saw how crazy it got towards the end of the day. So if you sold this morning at $118, and then you sat in the parking lot for about an hour and you went and bought back everything that you just sold, you were already up $17 an ounce. Absolute insanity, guys. We don't expect this on a daily basis, but hey, once we start getting into the hundreds, once we start seeing these big swings, isn't this what everyone wanted? Is this what everyone wanted? We wanted those high prices, but hey guys, with high prices, you gotta have, you know what? You gotta have some steel hands. You got some diamond hands, silver hands, gold hands, whatever you want to call them, baby, because that is volatility. All right, guys. So let's talk about why it's running today. Safe haven demand. As usual, gold and silver are reacting to escalating global uncertainty. Investors are moving money out of volatility assets and into hard assets. Even the Financial Times noted that global investors are piling into gold as a safe haven while geopolitical tensions persist. A weakening U.S. dollar. A softer dollar tends to boost dollar price commodities like gold and silver, and recent data shows the dollar retreating against other major currencies, making metals more attractive internationally. Guys, today we saw the DXY, the dollar index, hit a low of $96.87. Currently it's at 97. If we look at a 1 month trend, this is down. Just about a month ago, it was sitting at 99.11 Today it is at 97. So that's nearly a $2 swing on the downside for that. So that's a huge reason why. Central bank reserves and ETF inflows, hedge flows, and inventory accumulation by central banks, combined with record inflows into gold-backed funds, are supporting prices. Analysts say gold may continue to climb towards neutral structural levels given such demand. And guys, silver isn't just a monetary asset, it's also an industrial metal. Tightening physical supplies, weak inventories in London vaults, and growing industrial demand are creating upward pressure on price. Physical tightness amplifies price movements, and guys, we can also see that in the Chinese market. We have over about a $15 gap right now in the Chinese market, which means in China it's trading at about $120. So that's that East versus West war that we're talking about. Because right now, all China has to do to get cheaper silver is buy it from the US and sell it in China, and they'll make about $15 an ounce, which is absolutely insanity when you think about that. They can just simply buy it, ship it, and sell it and make money. And they're not exporting it, so keep that in mind. They're just hoarding all of that silver. So who's the real winner there? Not us. I'll give you a future hit on that one. Spot versus futures is a key thing that separates pro stackers from the casual watchers. Spot silver printing at $118 reflects real-time demand for immediate metal, not just paper contracts. Futures are also pricing in these moves aggressively, indicating traders expect this trend to stay alive. When both spot and futures are elevated and trending together, that's confirmation, not just a headline spike. All right, guys, I mentioned it earlier, but let's go to the gold and silver ratio. one of the most important metrics in metals is the gold to silver ratio. And today we saw it compress all the way down to 43.5, which means it takes about 43.5 ounces to buy silver, to buy 1 ounce of gold, of silver to buy 1 ounce of gold. 43 ounces of silver equals 1 ounce of gold. And that was a historic low right there, guys. That's the lowest we have seen in years. But hey, a declining ratio means silver is outperforming gold, and this usually happens when silver gains momentum due to both industrial demand and safe haven flows. To give you context, markets have been watching this ratio because extreme compression like this historically signals that silver could continue to catch up to gold in valuation. Okay, guys, now let's talk about this volatility that we saw and what's it going to tell us. Silver didn't just go straight up, it pulled back sharply within hours, resuming its climb. That kind of volatility is not random. It suggests large positions are being scaled in and out. Dealers and institutions are adjusting risk exposure. These are real physical supply and demand dynamics playing out. A $16 volatility move inside one session means both speculators and real money investors are actively engaged. And this tells you that this rally has teeth. Like I was mentioning earlier, guys, we saw that huge spike up this morning, and then we saw timber all the way down to nearly $101. And guys, that is not for the weak. If you are buying, selling, or trading silver right now, you've got to be careful. And hey, don't be mad if this happens to you. A profit is profit. Sell for profit. Or if you have to sell to pay a bill, sell to pay a bill. Don't feel bad. But for the people who are holding on and just enjoying every movement, I applaud you. So guys, what to watch next? Here are the key things I'll be watching in the next session. Does silver hold above 110 on closing basis? Does gold break and close above 5,000 again? Does the gold to silver ratio stay compressed or widen if silver cools? How are physical premiums in the US Mint and dealer markets behaving? Those are real signals that matter. Today's move was historic, guys. Silver at 118 and gold above 5,100, and the ratio being at 43.5. This is the sort of tape that lifelong stackers remember. Guys, today was historic. Write that down in your books. Remember today, because we will hopefully not see another day like today as far as the volatility, those $16 upswings and downs. Guys, that was just insanity. But hey, if you want daily market breakdowns that make sense with real sources and real context, hit subscribe and make sure you're locked in for tomorrow's update. But before you leave, guys, do you think silver goes to 125 first, or does gold hit 6,000 first? I'll pin the most insightful response. Guys, as usual, keep stacking, stay smart, stay safe, and I'll see you tomorrow.